various kinds of sums regarding the final account of cooperative society. Under final account, we will prepare uh, trading account, then profit and loss account, profit and loss appropriation account, and balance sheet. And we will consider the various kinds of items which will be posted in a relevant ledgers and the balance sheet. Sometime net profit we have to calculate. From this net profit, 25% portion will be transfer our 25% portion to the reserve fund, that you know that we have studied in our last lectures. And the you can easily solve any kind of sum whenever cooperative societies question will be there. Now, today we are going to learn one of the important topic, one of the important module, that is final account of banking companies. Banking companies final account, it is very important for exam point of view, because all chapters are equally important, and from these chapters banking company is one of the important chapter, and we will study the final account. Now you studied already cooperative societies final account, and in that we have studied the traditional accounting treatments. But banking company in India, it is governed by the Banking Regulation Act 1949, which came into effect from 16 March 1949. As per the Section 2 of the Banking Regulation Act 1949, provision of the Companies Act 1956 are applicable. Now, Companies Act 2013 are applicable to all banking companies. And in the absence of the special provisions to the effect of the Banking Regulation Act 1949, we will discuss about the final account. Now, friends, first of all, we will discuss the background, we will discuss the meaning and the various kinds of terminology in our banking. Now, first of all, what do you mean by bank? So, you know about the banking meaning. The banking means what? The banking means the accepting for the purpose of lending or investing, investment of deposits. Then after that, uh, deposit of the money from public, repayable on demand or otherwise, and withdrawal by check or draft or otherwise. This is the meaning of the banking. Now, banking company means what? The banking company means any company which accept the deposits of the money from public and merely for the purpose of financing its business of manufacturing and trading shall not be deemed to transact the business of banking. Now, in your screen, if you see that the simple meaning of the banking, the bank means the commercial institutions. It's permitted to accept, collect, transfer, lend, and exchange of money, claims to money, both the domestical and internationally, thereby conduct smooth banking activities. Now, I last earlier I discussed about the Banking Regulation Act. Now, the Banking Regulation Act is 1949, and this particular Banking Regulation Act and Companies Act 1956. Now, presently it is the 2013. They have mentioned the meaning of the banking. The banking means what? Accepting. They accept the deposits from customers. If you want to uh, do the banking transactions, first of all, you have to open bank account and deposited minimum amount. That is one of the criteria to become a bank customer. And therefore, accepting the deposit, it is one of the important element of the bank. Then purpose of lending means borrowing, giving loan to the customers, to the companies, to the others. And it is a one type of investment, deposit of the money, public repayable on demand. Sometime if you are deposited in your fixed deposit 1 lakh rupees, or if you are deposited 1 lakh rupees in saving account, whenever you require, you can anytime go to the bank and collect your money. It means deposited money from the public repayable on demand. Whenever the public is demanded, that time bank has to repay their money. And withdrawal by check, they will use the check, draft or order or otherwise. Sometimes they may be RTGS is there, then nowadays ATM card is there, they can easily withdraw the money. Now, business of banking company. Now, business of banking company, it is very important. Whenever what kind of business they are doing, so we can say that as per the section 6 of the act, banking company may engage in the following business in addition to their usual business, banking business. Now, you know that generally bank borrowing, raising, taking up the money, lending, or advancing of the money either upon or without security, or drawing making, accepting, discounting, buying, selling, collecting, and dealing. These are all kinds of things you know about, you have studied. The banking, they doing the various kinds of things. You know about the bills of exchange, it is called as a hundis, promissory note, draft. These are all kinds of things bank can do. Then after that, if you see that there are number of activities they can do, uh, you can open demat account, trading account. Nowadays, you can buy the securities, you can sell the securities, you can buy the foreign exchanges, you can buy the shares, debentures, stock, bonds, securities by with the help of bank. The bank provide the various kinds of opportunity to generate the money, and you can do the deposit, traditional deposit, saving account, recurring deposit account, then fixed deposit account. There are number of schemes are available in our banks. The bank act as an agent for any government or local authority, and any kind of carrying of the business, then contracting for the public and private loan, negotiating for issuing the same. So these are general terms are there that you should know about these things. Now we will not go through all kinds of theoretical part, because we should know about the final account. Final account, how to prepare, how we will solve the final account sum, that we are going to learn. Then now, important accounting provisions of Banking Regulation Act 1949. Now there are various kinds of accounting provisions are there, and it is very important for our study. Now, first of all, no banking company can carry the business in India unless it holds a license issued by Reserve Bank of India. Suppose if you want to open bank, you should take the license from the Reserve Bank of India. The license is very important. The permission of the RBI for opening a new place of business or changing the existing place of the business in India or outside India. RBI, while granting the license and ensuring the financial soundness of the proposed bank. Suppose if you want to open any particular bank, you should acquire license from Reserve Bank of India. Reserve Bank of India is a banker's bank, is a central bank of India, and they will provide the license to any particular bank. Now we will study about the what kinds of provisions are there. So here, in case of the banking company incorporated outside India, incorporated means registered outside India. If it has a place or places of the business in the city of the Bombay, Bombay means Mumbai or Kolkata or both, so rupees 20 lakhs is a registration fees there that you should know about this. Now, if the place of business are other than the Mumbai or Kolkata, that time 15 lakhs. So these things you have to keep in mind for company incorporation outside India. Any banking company incorporated outside India and they want to do the business as a banking in Mumbai or Calcutta, that time the amount should deposited, amount should be required, it is 20 lakhs. If they are doing business other than the Mumbai and Calcutta, the amount will be 15 lakhs. These things you have to keep in mind. So number two, in case of the banking company incorporated in India, if the company is registered in India, if it has places of the business in more than one states, they are doing their business more than one states, it has a place or places of the business in Mumbai or Calcutta or both, that time it required 10 lakh rupees for registration. So this thing you have to keep in mind. You, if the banking company is registered in India and they want to do the business activities in Mumbai or Calcutta, it required 10 lakhs. It has a places of business in more than one state, but not in Bombay or Calcutta, rupees 5 lakhs. It is very interesting. Suppose if you are doing the banking business and you required to do the business in more than states, but not in a Mumbai or Calcutta, the registration fee is 5 lakhs. And if you are doing the business more than states and you are doing the business in Mumbai or Calcutta, that time your registration is 10 lakhs. So these things you have to keep in mind. If it has a place of the business one state but not in Bombay and Calcutta, that time 1 lakh rupees in respect of its principal place plus rupees 10,000 for each of its other places of the business in the same district. So if you are doing your banking business within the state and it is not a place of the Mumbai and Kolkata, that time incorporation fee is rupees 1 lakh. And other places if you are doing in the same district, that time you should pay 10,000 rupees. Rupees 25,000 in respect of the each place of the business outside the districts. If you do the business each place is outside the districts, that time 25. The total need not exceed rupees 5 lakhs. So your amount should not be exceed 5 lakhs. In the case there is only one place of the business, then you should pay rupees 50,000. So these are criteria for registration. These are criteria to do the business and it required license can you can collect from the Reserve Bank of India, and for that purpose you sh- for that purpose Reserve Bank of India gives the permission, gives the consent and registration. It is a one of the important part. Okay, now now banking company, see that friends, we will concentrate on the final account. You should know about the certain background and final account. Now final account, we should know about the what kinds of books of accounts prepared by the bank in order to have the immediate entry of the voluminous transactions. Voluminous transactions means maximum more than lakhs of transactions, unable to continue the internal check on the record of these transactions. Banks are required to maintain subsidiary books along with its principal books of accounts. Therefore, numerous transactions are there, and therefore subsidiary books is uh, many banking companies are maintaining. Now subsidiary books means what kinds of books? The receiving cashier counter cash book, paying cashier counter cash book, current account ledger, saving bank account ledger, fixed deposit account ledger, investment ledger, loan ledger, bill discounted and purchase ledger, and customers acceptances, endorsement and guarantee ledger. These are the around 9 subsidiary books prepared by every bank because of the numerous transactions are there. Therefore, they want to prepare separate cash book for receiving and paying. Then they will prepare the current account also because they know about the current account is the account. Who prepare the current account? Who open the current account? Those who are the businessman, they can open the current account. And current account ledger separate prepared by the banking companies. Then saving account ledger, those who are open saving account in particular bank, such bank prepare separately saving bank account ledger. Then some customers open fixed deposit account, and for that purpose bank should know about the how many fixed depositors are there, how much amount is deposited in the deposit account. Therefore they prepare separate fixed deposit accounts. Then investment ledger. Now every banking company invest maximum amount of money to outside the institutions. For example, they can buy the securities, they can buy the shares, they can buy the debentures, bonds. Maximum all banking sector companies, they are doing the investment and earn the money for development of their bank. Now loan ledger, they will separately prepare loan ledger. Now loan ledger means what? The loan ledger means how many uh, persons borrow the loan from the bank. Loans are various kinds of loans are there. Housing loan, personal loan, nowadays motor car loan, then the two-wheelers loans, then festival loans, uh, renovation loans, housing renovation loans. These kinds of loans are provided by the bank. Therefore, bank has to prepare separate loan ledger. Then bill discounted and purchase ledger. Bill discounted, you studied about the bills of exchange. Under bills of exchange, drawer draw the bill, drawee accepted the bill, then bank discounted, then this discounted bill they prepare separate ledger. Then customer acceptance of the endorsement and guarantee. ledger. So these are the subsidiary books prepared by every bank. Then after that, principal book. Principal book means what? Cash book. It records the all cash transaction. It is a principal book. And one more principal book bank has to prepare, that is general ledger. Now it includes control account of all subsidiary ledgers and different assets and liability accounts. So you should know about the banking sector, what kinds of books of accounts they will prepare. Now, friends, we will talk about the one of the major and important topic, subtopic, that is non-performing assets. It is one of the interesting. Why it is the interesting non-performing assets? Now, what first of all, what do you mean by non-performing asset? To those assets which fail to generate expected return to the bank due to borrowers default in making payment. Suppose suppose a Bank of Maharashtra is a one of the bank, and they gives housing loan, personal loan to the customer. If Mr. X borrow the loan, personal loan, from Bank of Maharashtra, Mr. X borrow the personal loan from Bank of Maharashtra, say rupees 10 lakhs. Mr. X has borrowed loan, personal loan from Bank of Maharashtra of rupees 10 lakhs. Now he has to pay the EMI monthly, equator monthly installment, but he is not capable to pay the debt of the company. So whatever loan 10 lakh rupees bank has provided to the Mr. X, it is called as a non-performing asset. Non-performing asset. It is simple meaning whatever loan provided to the customer, it is not returned. Whatever we are expecting, it will be returned to bank. It will not return. So it is considered as a non-performing assets. The assets loan which fail to generate or expected return to the bank. Why? Because due to the borrower is defaulter in making repayment. It means customer is not capable to pay the debt of the bank. It is called as a non-performing assets. Now, friends, last 6 months, many persons, many customers suffering various kinds of financial problems because of the COVID pandemic, and many companies are not providing their salaries. Many companies they retrench their employees, and therefore those persons they lost their job, and they have already housing loan, personal loan. How can they pay? So it is a big issue. Therefore, if you see the from March to November, in this particular period, maximum amount of non-performing asset generated in every bank because of the because of the default in making payment. Borrower is default in making payment. But Reserve Bank of India provide the guidelines, so they you can extend your payment up to 2 years. Those customers they are not unable to pay the EMI to the bank, they can pay after two 2 years. Now, in accordance with the international practice, the directives of the RBI, the bank should recognize the income and of on non-performing assets when it is actually received, and not on accrued basis. It means if the customer paid the amount, repaid the amount of the mm, loan, whatever actual received, that amount we have to count it. We will not count the accrued basis amount. So these are term is there. It is very important. Non-performing assets. It means it is a simple meaning loan borrowed by the customer, but he become a defaulter because of non-payment of loan. Such loan is called as a non-performing assets. Now, friends, we will move further. Now we will discuss final account because our subject is advanced financial accounting and we should study the final account. Now, before starting this final account, you should know about the various types of deposits company collected. You know that the company banking company collect the various kinds of deposits. Now what kinds of deposits company can collect? First of all, company can collect fixed deposit, then saving bank deposit, then current accounts and recurring deposits. Fixed deposit, saving bank deposit, current account and recurring deposits. One more things that we should know about advances. Advances means loans. Banking company provide loan to their customers. So various kinds of loans are there that you should know about. Loan includes term loans, then cash credit, and third one overdraft, and fourth one discounting of bills. So these are the four advances are there. Now term loan means what? So these are the advances given by the bank to the customer and it is repayable in a fixed period, that is called as a term loan. Sometimes they will give the cash credit, sometimes overdraft facility also they will provide. Now, friends, the Banking Regulation Act 1949 prescribed the format of preparing final account of the banking companies. Now, we have only 10 minutes to discuss this. That format that we are going to learn, I will take the break for 5 minutes and we will start again. Okay, fine. Again, you have to come after 5 minutes.